Good evening. This is Rick Prosser from StockChartSense.com, and it's March 26th, and we're going to look at Apple today. Everybody's favorite stock. It sure seems that way anyhow. Strong day in the market. Market looked really good today. It looked really solid, and Apple's looking pretty good here as well. And the question is, are you involved in Apple? Have you bought Apple, or are you too afraid to buy just because of how far this stock has gone up? I mean, it has just had a move here, and we can all see that it's really pretty extended from the 50-day moving average. Now, what's happening though is the 50-day moving average it's creeping up there, and as time goes on, it will creep up. If this stock just starts to consolidate here, at some point the 50-day moving average will catch up to it. Just the function of time and math, it'll catch up, and then guess what? The 50-day moving average is not going to be quite as extended. But I think this stock's really going to start moving up. I think it's working itself to move to another leg up here, and we'll look at why I think that, and then how you can get involved. So let's just go to the weekly chart here. And the thing I notice here right off the bat, look here. Here's February of last year, right? And here's February of this year, and of course we're right around in here somewhere. I would say more probably right there from there. But the thing I want you to see here that's important is look how this stock pretty much just really went sideways for the year. I mean, yeah, it had a little pop there. I mean, I guess you could say it was 350. It went to 400. I mean, that's not a huge amount number, or 300 to 400. I guess it's a little bit. I mean, it had a little move, but all in all, I think if you really take a look here, what you see is just a stock from February until this year kind of just went sideways. And what was happening during this time, if you look, let me get these things out of the way here for you. Sorry about that. I want you to take a look at these Bollinger Bands here. Look at these Bollinger Bands. Look how tight they are. Really tight there. I mean, even through here. I mean, not quite as tight, but tight there. Look, really tight there. They kind of expanded out there, but then they, maybe a little more there, but then they just started tightening up again. Remember, this is a weekly chart. What do you see here? You see more tight Bollinger Band than you do expansion. Expansion, when it starts to expand, that's the volatility. That's the stock starting to move up or down. And then here, you can see that they really start to expand out. This one here starts to go down, and this one starts to go up, and then what has happened? This stock just boom, boom. The candlesticks just kept poking right through the Bollinger Band. And what that tells you, when that's happening, when you see the bottom Bollinger Band going out down like that, and that one just going up the way it is, the Bollinger Band, this line going up, and the candlesticks are poking its head through it and protruding through it like you see there, that tells you there's a lot of volatility, and that means there's a lot of buyers coming in. And I think a lot of that had to do just how long it consolidated here, basically. I mean, you had a little uptrend, but it was just, there was a lot of volatility squeezed there, and it was just like a coiled spring, and then it's blasting off. And just think of this here as its launching pad. And that's what's happening. So I still think there's more upside to this. And the reason I do is because of this little launching pad here. I just think, I think there's more upside because of the launching pad. Two, the market is strong, and I just think people want to be involved in Apple. They just announced a dividend. You have money managers out there who can't buy stocks that don't have a dividend. Well, guess what? Apple has a dividend. Do you think they want to be involved in Apple now? Yeah, they're going to get a dividend, and they're going to get the growth of the company and the appreciation of the stock. So they're going to get involved. Now, how do you get involved? Well, let's go back to the daily chart here and take a look. First of all, you need to understand, you are late to the party. Not being late to the party would have been buying down here, okay, and then riding this thing clear up to there. Then you wouldn't have been late to the party. But the party started here, and if you're getting in here, you're a little late for the party. But I don't think the party's quite over yet. But you still must realize you're late for the party, and you need to take precaution when buying the stock, because it could turn around on us. Anything could happen, and the stock could turn around. And my feeling is when this stock does turn, I mean, it could have some really nasty down days if something were to hit the market and the market decided it's going to start turning on us. I really think Apple could get hit. Now, it does have a dividend, so that will support it somewhere along the line, but I still think there's a lot of hot hands in here. So how do you get involved? Well, let's zoom in here. If you're planning on trading this thing, you want to get into it, and you're a trader, real simple, your stop's going to be about right down here somewhere. I would say put it right under the low of this one here, which is 591.48. I would go a little lower than that. I would go like 589.48 or 588.48, somewhere in that area. I wouldn't put it right under that, because it could pull back to 590. I think 590 is the key level, is what I'm trying to get at. So if you're a trader, I'd go somewhere in that area. You'd have to adjust your position sizing to account for that. So you need to understand your risk and what you're willing to risk. If you're a trader, that's my stop. If you plan on investing in this and you think it's got more upside and you want to be a little longer term investor, then what do? Here's what I would do. Real simple. I would go ahead and put a quarter of my position on here. I would probably do that. If the stock started to turn around and fall down, if it caught support right around here to 20-day moving average, and I mean really caught support, in other words, and had a nice up volume day like this, and you saw a white candlestick like this, that's where I'd add another quarter of my position. Now, as long as the volume days on the down days weren't like super duper high candlesticks volume like this here. If your down days were all like this, now this was one down day, but if you had one down day and then you had another down day and it looked like this, and another down day and it looked like this, I would wait for a while before I put on my quarter of my position, because it could actually come down to the 50-day moving average. But that would be my first target area to put another quarter of my position in. So a quarter here and then another quarter here if the stock comes down orderly on decent volume. Now, what happens if the stock starts to just take off without you and it starts to go up? Well, that's the risk that's the price you pay. I mean, you don't want to go all in. If it starts to go up, let me get my little deal there. If it starts to go up on you, that's fine. What can you do? Well, let the stock go up. Let it go up, and then whenever it goes and wherever it goes, whenever it starts to have a few down days again, when it starts to pull back to a certain level and it starts to find support, how do you know support? It'll come up with a white candlestick and there'll be some volume like there was today. Then maybe you can put on another quarter of your position. You'll be averaging up instead of averaging down, but you'll at least have a profit in there, and you won't get killed if the stock really starts to go down on you, because you'll have opportunity to get out if you feel like you need to. But that's how I would do it. If you're really bullish, if you want to put it on a half position here, you can, but it could come down to here. You never know. Now, my gut's telling me, I think what's going to happen, I think it's going to bust through this high here, which is like 609 something. Let me see what it is exactly. It's 609.95 or 65. My gut tells me if it goes above 610, I think it's going to bring on some more buyers. That's what I'm saying. How far it goes up, I don't know. I mean, I think we could see 6.25 on the horizon here. I mean, that would be a good number. 630 would be a good selling point for a lot of traders. That's what they'd be thinking. Well, if it busts through 610, I'll hold on to it to 620, 630. But I mean, we'll have to see about that. I don't know for sure where it's going to go, but still looks like it's going up to me. If you want to get involved, that's how you can. Well, that's it for today. Listen, if you like what you hear here, you like that. If this has helped you at all, let's put it that way, go over to StockChartSense.com and sign up for the free video, and I'll let you know every day when this is posted. Also, my website goes live on April Fool's Day. And if you're on my mailing list, I am going to give you guys a special offer that you can come into for the premium content. And believe me, it's going to be a great deal. Now, what is the special, the premium content? The premium content is this, but a lot more in depth with a lot more stocks. We go over a lot more analysis. But you also, I have tutorials over there that will help you learn about this stuff as well. I'm giving you an overview here, but I actually go into great detail about how to use the Bollinger Bands and how to manage your risk and how to place stops and how to invest and how to buy and all that. Go into a lot more training with the premium content. So if it sounds like it's something that interests you, you may want to go ahead and go over there and sign up for the free mailing, and that way you'll at least have an opportunity to get a great deal when I go live. Take care, guys.